G'day, Justin Hogg here from RightSource, talking things accounting in beautiful outdoors. Now, another question that's come up recently is people wanting to understand what an asset is for their business. Now, what I suppose they're trying to understand is often you go to your accountant and they say, well, we need to identify the assets of your business, or you need to make sure you're accounting for things correctly so the assets are identified. Now, what does that mean? What are we talking about when we're talking about business assets? Let's go right back to fundamental terms. So what is an asset? Now, if you looked up the dictionary or Google, an asset is something that is useful or valuable thing. That's it. It's something that has value. When I look at that definition, it's also something that has value over time. So it's not like it just has value now, it has value later as well. So it holds its value. From that simple definition of what an asset is, let's have a look at some of the stuff that you might use in business. So a building is something of value, yes, and it will be there for a while. I hope so. So yeah, that would be an asset. A car, similarly, something that you'd use for a period of time, it has value to you. So yes, it would be an asset. A table, again, something physical, you'll write on it or use it for a period of time. So again, that's an asset. A chair, yes, an asset. You get to sit on it, it's there, you can sit on it, and it doesn't wear out straight away, it's there for a period of time, so it has some value. So physical things are quite easy to think about in terms of value. Another thing that's an asset that you might think about is a trademark. So where you register your trademark for your business, well, that's something that has value to you because it's helping protect your business and it will be there for a period of time. So a trademark is something, again, that you look at as an asset. Now, one thing that is also very interesting is that our people. We always talk about our people being our greatest asset. And when you think about it, our people are, because they have value, they provide value to the business, and hopefully they're going to be around for a long period of time. So they continue to create value for your business. That's just looking at the specific dictionary meaning of an asset in terms of things that have value. In accounting, a definition of an asset is a little bit more specific. An asset for an accounting purpose is a resource that has economic value that can be used for future benefit. So similar here, it's for the future, it has value. It's that economic value which I think becomes a bit more specific in accounting, and that you need to be able to both have a value on it. So effectively an economic value is something you can sell or you can have a sales price on. So in that definition, there's also the definition of owning it. So you actually own the asset. Now, when we look at the examples that we did just before in terms of just general assets, the first one that is actually very interesting is people. So from an accounting point of view, people are not an asset. Fundamentally, because you can't sell them. You don't own them. So because you don't own them, an accounting definition of an asset does not include people. Now, to get really finicky on this, you do potentially own the contracts you have with your people and your engagements and the contractual rights. That right is very hard to value. So again, because there's not really clear economic value, that's why we don't, from an accounting point of view, put people as an asset of your business, even though we all know they are. Then looking at the intangible things like your trademarks, well, they are still an asset from an accounting point of view because you could sell your trademark, you own your trademark. So, and there is economic value in that trademark because it could be and potentially will be worth something in the future that you could sell or that you'd be quite happy to pay for again to keep renewing and keep going in the future. Then we look at some of the physical assets. Well, again, they're pretty straightforward. A building, you own it, it has value in the future, it's an asset. Similarly with a car, a table, a chair. Yes, well, they all have value and you could all potentially sell them in the future, so they all remain assets. So we've gone through what an asset is generally and that it's something that's useful and has some value. Then we've gone into, well, what do we define from accounting as an asset? And really that's adding the concept of economic value, something that you own and you could potentially sell. Now, there's a third step to understanding what you define as a business asset. And this is something that I talk about a lot, is that your accounts and how you record things for your business is really about recording your story and how you want to tell it. So From that point of view, the last step you need to look at what is a business asset is, well, what do you consider valuable? And what I mean by that is that, okay, we've got the definitional stuff on what an accountant would say an asset is or what accounting says an asset is. Well, but this is your story, this is your business. So in some respects, you get to decide how you want to tell it. So if there's parts of your business that you feel is an asset, well, you should look to record that. If there's stuff that you go, well, that's not really an asset in how I run my business, well, it's not an asset because it's your business and it's your story. So let's look at a couple examples. Now, some stuff will be obvious. So like a building, generally speaking, everyone will consider that an asset because you own it, it's got value, it'll be an asset. A car, similarly, something that will be, most people will consider an asset. Now, when you start getting smaller, so things like tables and chairs, things like computer monitors, things like phones, technically, all these things are assets. And from both a basic definitional point of view, but also from an accounting point of view, they're all assets. A lot of people don't include things like chairs or phones as assets of their business. They go, well, really, if I lose that chair or it breaks, it's gone. I'm not going to sell it. I'm not going to worry about holding that chair, or if I give someone a phone to use it as their work, I'm not going to capture that as an asset. That's an expense. I mean, that's part of running the business. I'm not looking to sell it, and it's not going to have, effectively, it's not going to be something that has value down the path. That's then up to you to decide what you want to contain as assets. So this comes back into a conversation people often have is, oh, well, if something's below $1,000 or below $500, I don't need to, it's not an asset. So, well, that's really where people have come up with their own definition of what is and isn't an asset, and they've applied that to their business. So, for example, a pen. That is an asset because you'll be able to write with a pen for sometimes a number of years, depending on how good a pen is. So technically, it has value and it lasts for a period of time. It could be classified as an asset. Now, pretty much no business has a pen as an asset. They go, well, it's disposable. If it gets lost, I'll buy a new one. So I'm not going to capture that as an asset. Similarly, personally, I feel like a lot of, in my business, office chairs, like I don't treat them as an asset. If they're something that people use to do their work, absolutely. And if they need a new one, we'll buy a new one, absolutely. But I don't track it as an asset. I don't feel that that is something I need to capture on my balance sheet as an asset to the business. So really this is then about you working out what you want to capture on your balance sheet, what you want to track, and where you want to draw that line in terms of what is and what isn't an asset for your business. The last, I suppose, thing to consider, and why it's always then good once you've got an idea of what an asset is, to sit down and talk probably with your in-house accountant or financial advisor about how you're going to treat these things, is there are some other implications that you do need to take into account when thinking about what an asset is. Now, these implications depend on what your business is and what your plans are for your business. So the first implication is tax. Now, tax will have, again, another definition of what assets are. And in some cases, they'll have a broader definition. So at the moment, where there's a lot of incentive by the government to purchase assets like motor vehicles, and effectively what you're getting the option is to write these off or claim them straight up. So what that effectively is meaning is for tax, they're not being treated technically as assets, so that you're writing them straight off. You're not including them, the value you're not carrying on the balance sheet. So tax will have slightly definitions of assets. Now, do you have to therefore account in your books what the tax definition is? No, you can have a separate definition. Quite often it makes it easy for a tax accountant if the definition in your books is the same as what they use for tax, but don't feel that you have to do that. If you want to have a slightly different definition, that's completely doable, and you can talk through with your tax accountant and your other accountant how you want to do that. The next aspect is when you're looking to sell a business. Now, when you're looking to sell a business, you want to make sure your financial statements are easy to read and easy to interpret, and in some respects generic, because you don't know who you're selling it to. Same as when you're selling a house, you want it to be, acceptable to a wider market. So you want it to be done in a way that's consistent with what people expect. So when you're looking to sell a business, you want your balance sheet and your assets to be consistent with what people would expect to see in there. So again, if that's what you're looking to do in 3 to 5 years, work with your accountant to make sure that what you're treating as an asset is consistent with that approach. Similarly, if you're in a business where you have to do statutory reporting, so not-for-profits is an area like this, or again, if you're on the ASX and you're listed, you'll have to do statutory reporting. Again, the definitional aspects of what is an asset is imposed on you to a fair extent. And again, you have to look at, well, is that the definition you're going to take for your reporting that you're going to do as a business, or are you going to effectively do two different things? Again, can be doable. Again, a lot of people do the simple thing of keeping them the same, because that way they don't have to worry about two different sets of accounts. But again, it's all doable depending on how you want to manage your business. And lastly, if you're looking to borrow money, again, banks will look at assets in particular ways, and they will treat some assets differently to how you might look at other things. One of those quite often is your trademarks or your intangible assets. They quite often won't value those at all. Even though you see them as having value for the business, they'll look at them differently. So that's really it with assets. It's very interesting in terms of a very strict basic dictionary definition of an asset, to an accounting definition, to what's your definition, to then also what others define as assets, and the audience that you're providing that story to in terms of what you need to think of when you're looking at what is an asset for your business. So there's some things to think about. We've got a lot of other videos that go through, I suppose, some of that finer detail in business, and where you're looking to maybe understand what a different point of view or how things are put together in business from a financial aspect. Feel free to subscribe. We put out videos every Wednesday, trying to help give something to share that might be a little bit interesting. It might open the door on a new aspect of the financial side of business for everyone out there. Otherwise, thanks for watching. It's been Justin Hogg from Right Source. I'll catch you next week.